Good afternoon, traders, and welcome back to this week's Hot Stocks Outlook for January 5th, 2018. Hope you're all having an excellent start to the trading year, and we have a lot to cover going into this week. We're going to be taking a look at the basic material space, which over the last several weeks, we've identified a lot of the metals and especially the aluminum companies doing very well, but also the oil service companies doing very well. So we got a few things to check out there. And also just want to mention how we're able to identify these really overall sector rotations. So we got a couple utility companies which are being affected by a lot of this movement in oil prices and things like that. So starting out here with Methanex, what we have here are the daily bars and candles representing the price data. We can see going back all the way to the end of November. And against those daily bars and candles, you see that we have a black line there, but there's also a blue line. Now, the black line that you see, that is a simple moving average, very common technical indicator. And how we're utilizing that is simply as a summary of what's already occurred in a given market. Really gives us no edge or advantage in the market at all. But what we're able to do is compare that to a predicted value generated via the artificial intelligence of the VantagePoint software here. And so what this value does is allow us to anticipate where average prices are expected to move going forward. And this is very important, especially for what we're going to cover today, as many of these stocks are driven by things like, the dollar index, the S&P 500, and especially oil prices when you're talking about oil service companies in the basic material space. And what we have here with Methanex is, again, a lot of these energies starting to move higher. We get a crossover between that prediction, that predicted moving average, and the actual, suggesting the trend is now to the upside. We want to start looking to take long positions in the market. Now, in addition to that predicted moving average, which identifies trend, we also have this neural index, a predicted neural index, another indicator, but more short term, that's forecasting 2 trading days ahead. So really you can think of it as 2 candlesticks looking forward. So just short-term strength or weakness. And that really allows traders to know what to expect over the next couple days moving forward, not get bucked out of their position too early. And last but not least, really rounding out the entirety of these predictive forecasts, we're also given a predicted range, a predicted high and low before every single trading day occurs. So you really have all the information you need to go in there and be very efficient with your trading style. And what we have here is saying, okay, well, from this point on, we want to look to be long the market and use this neural index to anticipate that short-term price action, but also use that predicted range. So if we come in and bring up those actual predicted high and low values for the actual trading day, you see how this works out. If we're looking to go long here, we have a predicted low gets hit on that day, another level hit here, and another level hit here right before this big rally, getting very close on this day as well. About 3 or 4 entries into this uptrend. So what that does is really ensures that you're getting in on the trends not only early, but at very good intraday prices. And as long as that blue line remains above the black line, the trend is still up. You want to be looking to add to your position. You can trail your stops up with the market, but just over this sector, and we've really seen it through all the oil service, pipeline companies, things like that. This market's up 24, almost 25% in just the past 26 trading days. We move this over to Abraxas Petroleum, and this is a little bit more recent, but the same logic and same methodology where we can identify fresh crossovers actually via a scanning feature in the software. So we're only looking at fresh trend changes in the market and then go in with these predictive tools and understand, okay, well, we want to obviously look to be a buyer if the predicted moving average is crossed above the actual moving average. And we want to use this predicted range to ensure we're getting good intraday prices moving forward. So again, we bring up those levels and you really see how this works out where, this is a very cheap stock. So we have very wide ranges here. We can see here, this is a 3.5%. This one's probably about 4% here. So big ranges in the overall intraday range from high to low. And what that allows you to do is be very patient and wait for these predictive levels to get hit so that you're not having to run stop losses and keep a 5-10% stop loss to deal with the volatility. If you're patient, wait for that level to be achieved, you're getting a really great intraday entry. And once you've got a great intraday entry inside of a existing uptrend, and you see very clearly this is still forecasted to move higher, you're getting really the best of both worlds, getting in on the right direction, the overall trend direction, but also saving yourself, pretty much from top to bottom here from these days is 4% move lower before you get to that predicted low. So you see overall about a 17% move from that level. And even if you get in right after the crossover, you're really in at about the same price as that predicted low level. So that's why it's very advantageous to wait on these levels to be achieved, really utilize the neural networks. And what they're doing is forecasting price, anticipating how the market's going to adapt moving forward so that you can, again, adapt as well and, again, be very efficient with your trading. Another opportunity here, very similar to the last couple of opportunities, because what we've identified is this overall basic material sector is really where you want to be paying a lot of attention. Another crossover there, but again, just want to highlight the predictive capabilities here as far as understanding that, okay, well, if you want to be along in the market, you want to be buying at these predicted levels. And you see you get one really early here, nice entry into the market, but you never get a signal that says, okay, well, the trend's reversed. You never get that signal that says get out of the market. Just wade through this short-term weakness, but stick around for this 18% rally higher in the market. Now, over the past several weeks, especially with the aluminum companies doing well, earlier back in November, we had a lot of the retail companies doing well, Urban Outfitters and things like this. But some markets aren't going to do well, and especially when you're talking about oil prices, seeing volatility, and that's going to affect especially utility companies, oil service companies. So we've covered 3 oil service companies here, but if we go ahead and look at a couple of these utility companies, and we've really seen it across the whole sector, getting crossovers to the downside. And this makes perfect sense. I mean, if oil costs are getting higher, these utility companies, their margins will be squeezed. And there's a lot that goes into that. But as far as a trader, understanding how you want to approach the market when you want to get involved in a particular trading idea, here we have this crossover to the downside suggesting, if you're going long some of these oil service companies, maybe you want to go short some of these utilities. And again, use that same approach of the predictive technology to guide you as far as where you want to be looking to take short positions in a market like this. So you see about 1, 2, 3, 4, 5 entries into this downtrend, and we see that's resulted in a pretty nice move lower here. We're pretty much still trending lower. I'll go ahead and bring up the profit calculator here, but so far down about 8 or 9% from when those crossovers came through. So a really great opportunity in a very bullish market to still be hedging your overall portfolio, not be completely long, and if volatility comes in, really making money on both sides of the market here. Here in FirstEnergy, very similar situation where what you're going to see in this utility space in this example is a lot of these crossovers coming through at the same time, just like we've seen with the basic material and metal companies there. And when you get all these crossovers to the downside, it's even more supportive that this overall sector, not just this individual stock, is going to see some weakness. So again, we can bring up those predicted levels and really see how this works here. Shorting very early in the market, you see we get some gaps higher here, but you'd actually be shorting at those open levels in the market, and we never get the crossover to the downside. So never get the signal that says, okay, the trend is over. You want to go ahead and get out of those short positions. We see overall, again, a really nice move lower here, about 10%, almost 11% to the downside. So just a really great example of how you can understand, okay, where do I want to be long the market? Where am I seeing a lot of similar companies starting to be very bullish, like we've seen in the oil service space? And where conversely, are you seeing a lot of weakness with a lot of crossovers coming through your scans to the downside? And again, you can hedge that portfolio, but most importantly, regardless of your trading style or approach, be very efficient with how you're accepting intraday prices within an uptrend or a downtrend. So really nice opportunities going on here. Want to just focus on these 2 broad areas, but again, a lot going on in the really overall market, but also the aluminum companies and a lot of the metal companies, really this overall basic material space doing very, very well and opening up a lot of fantastic trades. So as always, guys, thank you all for watching. Best of luck to you out there in the markets. This has been the Hot Stocks Outlook for January 5th, 2018. Best of luck. Thanks again, and bye for now.